Today, more data on Auckland housing. Hello again, it's Martin North from Digital Finance Analytics. Welcome to our latest post covering property and finance news with a distinctively Australian and New Zealand flavour. Today I'm joined again by Joe Wilkes. Hello, Joe.
Hi, Martin. How are you?
Very good. So you've come back from leave, all raring to go.
Yeah, it's been a nice break. Had a little trip up to Taupo, which we'll discuss in a different segment, I think, or maybe another post. A lot of building going on around there. Just generally getting back into the data side of Auckland, having had our drive around and just the vast number of houses under construction, the sheer quantity of development sites that are started, stalled, some of them not even begun. I thought we'd delve into things a little bit more detail. We're starting to see now, a couple of months on, we had the foreign buyer ban that came into force on October the 23rd. And I think what you find with housing, you tend to get a lag. So a deal gets done. Quite often it's a few weeks after a transaction completes. And there's some quite interesting data now coming out of Auckland, which I thought I'd share with you all if you've got a few minutes.
No, it's a good idea. And in fact, we got quite a lot of feedback. People quite enjoyed the drive arounds, but they're gasping for more data because, of course, DFA is a sort of data-driven site. So you're a mind reader, Joe.
Absolutely. Well, hopefully we'll give you some numbers to work on. The numbers at the moment we're relying on. I think my favourite agent up in Auckland, Barth and Thompson, because they're very transparent, as we've talked about before, in actually offering you information about what's going on, how many houses they're listing, how many houses they're selling, and I think it's been quite stark. There was a rush over the course of last year. There's a lot of talk about this foreign buyer ban. And I think there's been quite a lot of foreign capital hit the market. We know that central Auckland suburbs in quarter two, some of them saw up to 20% of transactions being made by foreign investors and foreign individuals. So having had October the 23rd pass and go, I think it's quite interesting now to see the almost immediate impact that it's had on the marketplace. November sales are reasonable. December, I think, is quite a stark contrast, but you have to look at November as being a month where maybe quite a lot of those deals that were done leading up to October 23rd, if they got a contract position, they would have then completed and got it recorded in the numbers during November's figures. So I thought I'd just run through some interesting stats. And it's Barth and Thompson. They maintained a share of the market in 2018, which has held pretty steady around 45% of all transactions. So you can extrapolate from their offering where the market's going, how successful people are being, and I think it gives it quite an interesting picture. So just to run through, Barth and Thompson have disclosed for the first time in their numbers that their median selling price average over the course of a whole year, so comparing 2017's accumulated transactions, the median price, to 2018's accumulated median price, is actually down 0.8%. The median figure now stands at $836,792, and it's the first time that we've seen this. So is this a result of an immediate impact of the foreign buyer ban? Don't know. We'll find out as we go through the course of this year. Transparency again. At the start of the year, Barth and Thompson had 4,194 listings on their books on January the 1st. At the end of the year, at the start of the year, they had 4,160 listings on their books. And at the end of the year, it's 4,194. So pretty even distribution of what's available at the beginning, what's available at the end. During the course of the year, they've listed 16,963 properties. So 45% of the market, that's gives you a bit of an indication. Call it roughly half. You're looking at 34,000 listings in Auckland over the course of 12 months. And of those 16,963 listings, they've sold 9,659. Simple calculation, if you start with what they finished off at and minus the difference between the beginning and end figures, you've got 16,929 properties that were available during the course of the year. 9,659 divided by that 16,963 gives you pretty much a 57% sales rate. So of the listings over the 12-month period, January to the end of December, 57% of sellers are being successful. Now, in a fast market or a seller's market, my experience would say that typically an agency will sell around 80% of what they list over the course of a 12-month period. That's where you've got people don't always move. If they don't get the right price, they stay put. Sometimes people are only moving because they saw a specific house that they wanted to buy, and if that house doesn't come to fruition, then they take the houses off the market. But to have 43% of properties being withdrawn, the numbers at the start and the end of the year are the same. You're seeing 43% of properties failing, and some of that will be because owners have not got what they wanted to buy, but a lot of it, I think, is just indicative of the marketplace. Overall, however, and this is quite interesting, the annual number of sales, so going into 2018, Bath and Thompson actually sold 8.1% more properties in 2018 than they did in 2017. And I hark back to, was this a pushed rush to push a transaction forward into 2018 with the knowledge that a foreign buyer ban in 2019 is going to make that untenable? And the 1st of January, we've also had the introduction of new anti-money laundering regulations that the solicitors and the real estate agents are going to have to adhere to. So few changes there in terms of the dynamic, and we mentioned it in I think one of our early posts, the More on New Zealand Property, where we talked about the impact of that marginal buyer, the removal of liquidity from the market, and the banks having to replace that cash or foreign debt with locally raised debt in the market, and we'll go on to that in a bit because it's quite interesting. We'll talk about the credit cycle and the credit easing as we go through this post today. So quite interesting that there was such a push throughout the course of 2018 to get these purchases done, and Bath and Thompson, because their rate of sales has stayed pretty constant as a proportion of the overall. I'd pretty much say that overall last year there were more sales made in 2018 than there had been the year before. Now we've flipped to post foreign buyer ban, and December, I think, is the first month that you can really say, okay, well, this is the first full month where we've probably not got the interference of the pre-October 23rd transactions. December 2018 was Bath and Thompson's worst sales month for December in 17 years. The lowest number of sales, they sold 504 properties. And you've got to think, well, over the last 17 years, the number of properties in Auckland has been on the rise because of building and because of population growth. So to have a sales number at 504 is quite low. January typically over the last 2 years has been a lower sales month than December because people go off on holiday. They don't transact from middle of December all the way through to the middle of January, and then the deals that they do in January are finalised in February. To give you a flip on where those numbers were for December 2017, there were 674 Barfoot sales in 2017, so they're pretty much 25% down year on year. And again, that for me is that immediate impact of the removal of the marginal buyer. January's figures, we're going to keep an eye on this. We'll have the real estate REINZ numbers, which will come through in a couple of weeks' time, which will give the national picture on what we're seeing around the country. To go into the next phase, and we saw it. I drove around Auckland, and I was just astonished at how much building was going on, from city centre apartments going up to the large urban sprawl that's going around the periphery of the town, and even beyond that, there are sort of midland developments where you're seeing quite a few blocks of 14, 15 units. So they're one-off units, but there's a lot of scaffolding and there's a lot of work going on around Auckland. I saw an interesting piece which was published by the chief economist of the Auckland City Council, who I think is a very smart chap. But the one thing I thought he missed in his analysis, and there was making a comparison about how the Auckland housing market's short of properties, and where we've got the the building rate consents compared for Melbourne, Sydney, and Auckland, and you can see that Auckland has lagged Melbourne and Sydney in terms of the rate of building, albeit we've been swiftly catching up over the last couple of years. And what I thought was quite interesting was that okay, we're building at a rate that actually is beyond 50% of the rate that Melbourne and Sydney have been building, and we have been doing for the last couple of years. And yet our population, and you look at Auckland's population sitting at 1.614 million, compared to Sydney's 5 million, like last census, I think it was 2014, but the belief is that it's 5 million now, and Melbourne at 4.8 million. We're building actually faster than they are relative to the size of population. So our building rates are over half the rate that you're seeing in Sydney and Melbourne, but with a population that's a third the size. I think 32% of Sydney's population, 33% of Melbourne's population. There is not that big shortage of construction. There was a really interesting piece in Stuff recently, at the end of last week, where and I mentioned this in one of our drive arounds, where I was comparing the Ireland situation when they had their big credit boom. Lot of imported construction labour from Eastern Europe, a lot of Brits as well, went over to Ireland. They built these great big developments at the outskirts of Dublin and then all the way throughout the countryside. They rented the early units while they were building the next ones, and then when the building or the credit tap turned off, the building stopped and they all went home. And we had a news article in Stuff the other day where the 28 Chinese developers, sort of Chinese builders, who'd come over working for a company in Auckland, who'd got them in on work permits. They've been housing them as well, so they've been housed and constructing projects. They all got laid off, and they've also been kicked out of the property that the company's been putting them up in, and they're up the creek without a paddle. Now this is the start of people looking at, okay, well, we're building too fast. We need to slow down, otherwise we're not going to sell the units that we've already constructed. And I think that without that marginal buyer, that foreign cash injection into the Auckland market, we could see this perpetuate over the course of the next 12 months. Going back to building consents, national consents in November were 3,120 properties consented, which was actually a drop of 4.4% on November 2017. The Auckland consents, and this is quite telling, so the month after the foreign buyer ban, who are we building the houses for? We've seen 1,172 building consents in Auckland, which is down 19% on November 2017. So immediately there's a reaction to, okay, slowing market. Are we building too much? Putting it into perspective of annual population growth, we had annual population growth 12 months ago. The year-on-year annual population growth was around 70,000 per annum for the whole of New Zealand. We've got annual population growth now tracking back towards 60,000 per annum. Year to year, national November consents in 2018 were 32,783. So we're building a house for every two people that we're adding to the population. And year to November 2017 was 31,123. So the building consents year on year are up nationally. We've been to Tauranga in our out and about and sunny New Zealand post. We've seen Palmerston North. There is a lot of building that's going on in the regions here to keep those numbers bolstered. So quite interesting times, because this whole housing shortage, I think we exploded that myth just driving around Auckland. What happens now with the removal of that foreign liquidity? Couple of the major lending banks, Kiwi Bank, have reduced their two-year rate just this week. So they're trying to stimulate some credit offering. And if you look at the actual credit growth chart, which I've emailed over this morning, you can see now how credit growth, albeit we added best part of 12 billion to the debt level of households in New Zealand last year. That wasn't an increase in the growth of credit. So it's actually, we did 12,000 the year before. So the credit growth is slowing at a time that building consents are going up nationally, but seem to be tapering off the top in Auckland now, and where sales volumes are immediately lower than we've seen over the last couple of Decembers. Now we don't have that foreign. Sorry, I'm not saying it's been removed, but I think we're seeing a massive reduction in the foreign cash being injected into the marketplace.
And of course, we've always said that it is credit availability fundamentally which links to home price growth, right? So if credit is more available, home prices rise. If credit becomes less available or the growth slows, that is sufficient to drive home prices lower. So what are we seeing? Are we seeing home prices, or is it too soon to tell what's happening to home prices in Auckland?
I think, well, we know year on year, 2018 prices were 0.8% down on 2017. We are, I think we're at what I would call the denial phase of the end of a housing boom. And I've seen this several times before in my previous life, where you've got that mismatch of seller expectations and buyer expectations. It's total properties. This is land and new home packages and properties in the whole of New Zealand. Currently sits at 34,344 listings available in the marketplace. In Auckland, the total number of listings is 12,155. That got up to 14,300 in the second week of December, and then dropped off to about 11,500 around Christmas Day. And that's not unusual. We used to see it in the UK. You'd just get people say, well, look, I don't want to prepare my house constantly for it being marketed. I'll take it off for a month over the Christmas period. I think what's going to be really interesting over the next month or two is to see the availability of stock and how that changes from 12,155 and does that start to spike higher. My feeling is that we've, from a lot of the agents that I've spoken to, that we are going to see an increase in the availability of stock as we go through the second half of the summer selling season. To what extent will it be, and to what level will the agents be able to educate sellers? Because if people are looking at transacting now, there's still quite a lot of properties that are being brought to the market with no price. It's all priced by negotiation. We'll see, I think, in 2 weeks' time, the Auckland auction rates, which get reported on. Barfoot and Thompson, again, they do good reporting on their auction stats. Those were 40% of largely around 40% for most of last year. After the foreign buyer ban, they dropped down to 19% success rate, and they have risen a touch during December, but the actual volume of houses being offered tapered off as you'd expect. So it's early days, but I think it's going to be really interesting to see how much property comes on. I think that there is obviously a feeling in the air that the market has peaked, and it's just a case of, okay, well, how much of the heavy leverage are we going to see? And there is a second reading shortly of the removal of ring fencing of tax losses and negative gearing. Capital gains is still on the horizon, and we should hear more on that probably sometime around February. So lots happening now, and already we're starting to see that removal of I guess transaction volumes.
Yeah, and of course we don't have household survey data as we do in Australia because we don't survey in New Zealand. But it's interesting that in Australia there are a lot of households who, in our surveys, are suggesting that they're going to put their properties on the market here because they're now concerned about future price growth or lack of it, and things like the negative gearing changes and other things that are going on. So essentially, we think there's going to be a lot of supply coming on in Australia, people trying to sell, and therefore we're going to see, I think, more weakness in prices. So it'll be interesting to sort of compare the Australian and New Zealand market over the next 6 months and see whether we both are heading in a similar trajectory.
Yeah, well, everybody over here was, and all the property bulls were saying how we follow Auckland, we follow Melbourne, and the whole argument that, well, these are world cities, they're going up in price. It's going to be interesting to see how the narrative of the bulls continues as Sydney and Melbourne. I mean, I know Sydney had a tumultuous December, and to see how that pans out over here. Because all of a sudden, a lot of the press is, oh, it won't happen here because we're completely different. But we're building at a rate that's faster than them compared to population size. Yeah, we've now lost that foreign injection of cash and debt, either format, which Australia, I suppose, removed to a certain degree 12 months before us. Housing markets don't go up in a straight line; they don't go down in a straight line. I think there'll be lots of interesting stats for us to look at over the next few months.
Joe, thank you very much. Yes, data's great. It's really just a good read, doesn't it, on what's going on?
It does indeed.
Thanks. Talk again soon.
Speak to you soon, Martin.
Thanks.